promises to be a beautiful week, starting off right today, Monday. Good morning, everyone. Welcome to this brand new week. This is Business Morning. This is where we do 55 minutes of relevant and current business conversations. I'm Ini John Mekwa. We'll start as usual from the global space, where we see that oil prices slipped more than 1% on Monday after OPEC Plus surprised markets by hiking output more than expected. They were talking about 411,000 barrels, but we saw that they moved the meeting from Sunday to Saturday, and they also increased that by 548,000 barrels per day. That's the hike that they eventually agreed upon on Saturday. And following that, now we see that Brent is down. It went down 0.23%. This morning, we see Brent at $68.14 a barrel, and also WTI went down, lost almost 1%, 0.93%, $66.38. Then OPEC Plus and that's the Organization of Petroleum Exporting Countries, and their allies, Russia is included there. On Saturday, they agreed to raise production by 548 barrels per day. The increased production clearly represents a more aggressive competition for market share and some tolerance for the resulting decline in price and revenue. The August increase represents a jump from monthly increases of 411,000 that OPEC had approved for May, June, and July, and 138,000 barrels per day in April. OPEC Plus is citing a steady global economic outlook and healthy market fundamentals, including low oil inventories, as reasons for releasing more oil. The decision will bring nearly 80% of the 2.2 million barrels per day voluntary cuts from 8 OPEC producers back into the market. And this, of course, the actual output increase has been smaller than planned so far, and most of the supply has been from Saudi Arabia. Now, here in Nigeria, well, not just in Nigeria, in Africa generally, passengers departing Nigeria, Sierra Leone, and Benin paid some of the highest air ticket taxes and charges in Africa last year, 2024, placing West Africa at the top of the continent's air travel cost rankings. Sierra Leone ranked first for regional departures with charges of $298, and second for international at the same rate. Gabon topped the international category with $297.07 and ranked 7 for regional at $260. Nigeria came third in both categories, with passengers paying $180 each for international and regional departures. Well, these findings were detailed in the 2024 Taxes and Charges Study review by the African Airlines Association, based on data collected across 54 African countries in September 2024. The report showed that West Africa recorded the highest average levies on the continent. That was about $109.05 for international departures and $97 for regional. And now let's see what's happening in the decentralized world. Stakeholders in Nigeria's blockchain and Web3 ecosystem, they met up over the weekend to discuss the way forward for Africa as conversations about regulation get even louder. And the first Decentralized Nigeria Conference featured conversations on Web3, decentralized finance, and blockchain technology.
The Decentralized Nigeria Conference 2025 aims to empower Nigerians with the knowledge, networks, and opportunities necessary to spearhead Africa's digital revolution.
In all things Web3, Africa has the opportunity to inject new life into its rising social systems.
A lot of us here need to carve that niche where we can add value, because I know that we're here to open our minds and hard to do a lot of things that will make sure that we get ourselves, not just ourselves, better, and our country really great.
The conference focused on how blockchain and Web3 innovations can effectively address real African challenges and generate significant economic opportunities.
Privacy-enhancing technologies.
The conference featured 4 distinct panel sessions that delved into crucial aspects of Africa's Web3 landscape, These sessions covered navigating regulatory complexities within the Web3 space.
Some of us could not come out publicly to talk about cryptocurrencies for fear of maybe disappearing. But today, few years down the line, we can walk into any government office. We can walk into any place in the world.
To have an organization, you need to be training your staff and employees on compliance, on data privacy, on smart contracts, audits, vulnerabilities within the system. Because if they don't know, in technology, they say you are as good as your weakest link within the organization. So even if you have the best of technologies and your staff and employees are not well trained, then you are leaving huge gaps.
Places like Singapore, Japan, what would have happened if the context we're trying to play out here was over there? The government will come embrace you and say, because you are trying to self-regulate the space that we are not ready for, we would like to give you an SRO status. SRO is self-regulatory organization. They are everywhere in the world. These are people that try to sanitize the space before anything goes wrong.
The organizers view the Decentralized Nigeria Conference as the initial step in a sustained effort to foster and support the growth of Nigeria's Web3 ecosystem.
And now, Odua Investment Company Limited has shared its determination to contribute to the diversification effort of Nigeria's revenue. The group chairman, Otumba Bimbo Ashiru, who was speaking on the sidelines of the groundbreaking ceremony of the redevelopment of Odua Court in Lagos, says that the group is focused on value addition.
It's agriculture that will lead industrialization. We have a company called SWACO, Southwest Agri Company, which, just about a few weeks ago in Ekiti, we have about 4,000 hectares. We are growing maize, cassava, and we've signed joint venture about 10 billion with different companies. We are doing cocoa. We want to start exporting our finished goods, not our raw materials, because we want to create jobs in Nigeria. And that's the mojo. And Mr. President has said it, that we should stop exporting raw materials, because when you export raw material, you are transferring our own labor, jobs outside. So the focus in Odua, because let me even tell you, it was agriculture that actually was the bane, was the foundation of Odua. Look at Cocoa House. It was the first 25-story in Africa. It was the funds from agriculture that it was used to build it in Obasanjo University, all the good roads infrastructure. So we are going back to that template. We are working on that. And our focus on agriculture, we have almost 40,000 hectares in the southwest. And don't forget that southwest is the economic hub of Nigeria. Odua is owned by the third largest economy in Africa. So you can see that we mean business. We are into real estate. We are into agriculture. We are even into IT, Swift. We just established another company called Southwest Technical Information Technology. So we are working on so many things. We have hospitality. Very soon, by early next year, we are going to be commissioning 154-room, refurbished Premier Hotel in Ibadan.
We're still talking about the real sector and value addition, also sourcing raw materials domestically. Now, let's speak to the Managing Director of Sasoli Industries here. He is Mr. J. Prakash Changrani, joins us virtually from Lagos. Mr. Changrani, good morning and welcome to the program.
Good morning.
So your company, you're a manufacturer, you're into fillers, additive, and calcium carbonate. And we are talking a whole lot now about sourcing for raw materials from the domestic front, especially when we look at the challenge of FX availability, or at least adequate FX availability. How has that been for you, getting domestic raw materials?
Let me start from the beginning. Sasoli Industrial Company, we were actually importing plastic master batches. Now, these plastic master batches are the colors used for all the plastic products to give them the colors, namely like chairs or tables or sacks or shopping bags. So the plastic raw material is actually a colorless product. So to make it colorful, you need the product called plastic master batches. Now we were importing them, and we were just bringing 10 to 12 different colors. Then we decided why not we start producing these plastic master batches in Nigeria itself, because we have the employment growth to be done here, and we have the facility, we have the infrastructure and all that. So we started this 2010, 2011. Now, so we started producing them locally in Lagos, Nigeria. And we are proud to say that we can produce international quality products here in Nigeria. To showcase that Nigeria can also produce quality products, we exhibited Made in Nigeria product in one of the biggest trade fair, which happens in Düsseldorf, Germany. And that happens every 3 years, and that is the biggest trade fair, where more than 150 different countries exhibit and the visitors come. Now, we were the only manufacturer, not from Nigeria, but from whole of West Africa, exhibiting our products there. And that we have been starting to exhibit from 2013, then again 2016, 2019, and post-COVID 2022. Then again we are going to exhibit this in 2025. I can tell you my first experience in 2013, that one of the Nigerian, he was passing through our booth, and we always keep a Nigerian flag on the booth. When he saw that, he really literally cried and said that I have never seen a Nigerian flag in one of the biggest exhibition. So that was the passion for Made in Nigeria product. Now, this has actually helped the economy. Now we can say that we are into this for nearly 15 years. And we started with plastic master batches. Right now we have nearly 2,000 different shades of the colors which are used in plastic industries. We are serving to the whole nation. Not only in Nigeria, we are also exporting to Ghana, to Togo, to Cotonou, to Cameroon. And we have plastic colors, we have white master batches, we have black master batches, we have fillers.
All right.
White.
Mr. Shanghai, yes. I just want to know, because we're here trying to preach the message of not exporting raw materials and actually sourcing for more raw materials from the domestic front. How easy or difficult is it, or was it, for you to switch and to stick to actually having a total 100% raw materials from Nigeria?
See, for plastic color master batches, as Nigeria doesn't produce the pigments, which are the colors, so we only import the pigments, which is nearly, you can say, 25 to 30% of the end product. Earlier, it was the 100% which was being imported. So now we can say that it is only 25% we are importing. So 75% is locally procured, that is the plastic raw material. And while producing this master batches, we were also importing calcium carbonate from Turkey and Egypt. Now that also we have started producing locally. So we are trying to minimize the imports of the raw material by sourcing locally in Nigeria, so that we can save on the foreign exchange uses. Rather, we also export, so we gain the foreign exchange also. So we are trying to be more independent on the FX.
So, what's the hurdle to producing these pigments you talked about that makes up about 25%, which you import? What's the hurdle of import or actually producing it here in Nigeria? Are there some things that we do not have in the country?
The countries which are producing pigments are mostly India and China, and it is a huge investment required and the chemicals required to be put in place to get that kind of pigments. But not only that, you need to have those kind of industries which can use these pigments. Namely, like we are not producing all the type of plastic master batches because we do not have the automobile industry where those kind of plastic master batches can be used, and we do not have so many advanced like white good manufacturing facilities like refrigerators or TVs and all that. So these plastic master batches cannot be used. So what we are producing plastic master batches is only for the household items, for the shopping bags, for raffia bags which are used for grain industry or cement industries and all that. So that the huge market is not there to produce the pigments over here.
Yeah, okay. So the industrials are those who can do a huge consumption of that. But I mean, I'm glad to hear that at least you are doing 75% of domestic raw materials. That's encouraging. But I would like to get your assessment. We hear the government talk a whole lot about the ease of doing business, boosting non-oil export. Would you say that the government is putting his mouth where his money is when it comes to actually implementing these policies so that business people like you, manufacturers like you, can increase your production and export?
Yeah, I can see there is a positive response and the direction of the policies which are being placed. Namely, number one, we can say that at least the exchange rate is a little bit you can say is stable, which is a very important thing. When we are manufacturing, you cannot keep on changing the prices. Namely, not like trading where you keep on changing the prices as per the market supply and demand. In manufacturing, it has to be stable. So that is one positive direction we can see, which is helping. Number two, in certain policies like earlier, the pigments which we were importing was having the similar import duty, and even the finished good which we are producing, which is called master batches, also were having similar duties. So to support manufacturers like us who are employing nearly 300 direct workers, we had to find the solution where we discourage the importation of the goods. So there has to be a difference between the raw material which we are using and the finished goods which we are producing. The import duties has to be different. It can be double or the levy has to put. So which is not actually happening now. So that support we need from the government for the manufacturers.
And what would you say about intra-African trade? We're preaching that message now, trying to increase interaction within Africa. How much of your export do you do with African countries?
Frankly speaking, it is just a fraction of the percentage because Nigeria is a huge country, and whatever we used to produce is been supplied locally. But now with the new project which we have started of calcium carbonate, and that will help us to export more. So the support which we need from the government for the export is that it should give the system, or it should make the system so easy that we can export. See, basically, we are trying together to the government to gain the foreign exchange. So for that, we need the support for easy cross-border or documentation for us to encourage gain more FX, which I think we are lacking. We should have that support for exports. This is the target which we are focusing from this 2025 to export more.
I wonder if you know about the AfCFTA, Africa Free Trade Area, and conversations going on around there. They said there's some goodies that are supposed to encourage, intra-African trade.
Yes, of course, we have the certificate also of which is called ETLS, in which the ECOWAS countries do not pay the import duty if they are buying within the ECOWAS countries. Yes, it is there, but the process of the export, it should be more smoother. Sometimes the ship reaches Ghana within 3 days, but the documents take nearly 2 weeks to reach the place, which is what we have to look into,
Yeah, because I had a conversation with an official of AfCFTA, and they told me that, it's quite smooth. You just reach out to the secretariat and all of that. So have you brought this to their attention, and did you get any positive reaction?
Well, we are, as I said, that we are focusing more this year on the export because we have excess capacity, and we are seeing some positive responses. But practically, we are going to start more on the export from this year.
And then we know that Nigeria is trying to battle inflation, so interest rate has been increased. How is that affecting access to funding? You're laughing.
I know, we were lucky to also get some, new project loans, which was a positive sign for the country, for the government to show that they are looking into more and more manufacturing, units coming up. So we are getting. I mean, I can say that there is a positive response from the government.
Well, it's good to see you laugh, Mr. Shangrani, and to hear you, have this positive perspective. And I hope more manufacturers have that experience. That would be really good for us. But we need to thank you so much for being a part of the program this morning. The Managing Director of Sasoli Industries, Mr. Jayaprakash Changrani, thank you for your time and wish you the best of the rest of the day.
Thank you very much. Thank you.
Let's take a break now. When we come back, getting more businesses on board. Startups will be our focus. After the break, please stay with us here on Business Morning. Welcome back. It's still Business Morning here on Channels Television. Let's discuss startups now. And, well, this is an interesting part. Money is involved, and we need to get more businesses on board if we are serious about boosting the economy of Africa, not just Nigeria. And I have joining me with this Cascador Prime Program Director, Amanda Etuk. Amanda, good morning and welcome to the program.
Good morning. I'm happy to be here.
I'm happy to have you here. So let's see a bit about what has happened with startups in the first half. If we could have that slide up, we saw that startups in Africa raised more than $1.4 billion in the first half of this year. They closed in $365 million in funding in June alone. On the equity front, they had $950 million raised in the first half, significantly more than what was done a year ago, 79% more, slightly less than second half of 2024, while the debt numbers until the end of May was at $177 million versus $255 million. They say June was impressive. This is according to Africa, the big deal. They are the ones who brought out this data. They said that they hadn't seen a monthly number that high. That's talking about June with the $227 million. Now, we have Cascador here who deals with startups. And there's a lot of money coming the way of startups on the continent. We're glad we still have the flow coming in because there was a time there was a bit of a reduction in the flow. So now, would we say we are on a steady uprise, or is there something pushing this impressive number for the first half of 2025?
So I'll start by saying that the startup bubble has burst. A lot of people now are looking at value and where to place their money. People are investing in businesses that have shown traction, not early stage, idea stage businesses as much these days.
Startups are those who are just starting?
They're still starting. I'm saying not early stage. We're talking about over 2 years in business, people who have guaranteed customers, people who have revenue on a month-to-month basis. So as an investor, you're more likely to double your investment in a business that's showing you the numbers.
So does it mean that some fingers have gotten burnt? That's why we see this trend.
Oh, yes. A lot of people have gotten burnt. A lot of equity investors, angel investors have gotten burnt over the years. And now they're putting their money where the numbers are, really. And that's what we're seeing happening. People are doubling down their investments in successful enterprises. People are doubling down on businesses that are showing the numbers. It's no more about the ideas anymore. And we were at that stage a few years ago in 2021. We're receiving high amounts of idea stage businesses getting multi-million dollars in funding, but now it's changed. People are going where the value is.
So what's happening to the ideas?
Oh, it's very interesting now. Because of the risk involved, a lot of investors are now more seasoned. You've gone through the first, second, third time. You have almost a 10% chance of success, really, investing in early stage startups. And now, because of the way the economy is, it's more important that you can almost guarantee a return on your investment. It's no more just about something futuristic. It's the business solving a real problem. Are they real paying customers versus maybe people trying to achieve scale as what was targeted earlier years?
But isn't this going to discourage new ideas, the very new upcoming, startups?
Yes. I don't think so. I think that this is going to make more founders think deeply about the real problems to be solved. A lot of things in the past years around vanity metrics. How many users can you onboard? How many people can use an app? But now that discretionary capital is slimmer, people have slimmer wallets. You're going to build a solution that people would really pay for. So for any founder now, you have to think: is this a business worth pursuing, or is this a hobby? Are people going to pay? Am I going to have paying customers once I launch this idea? So it's going to hone more serious founders rather than just career entrepreneurs.
So I thought your hobby should be able to give you money. But before we get there, where is this funding coming from? Is it mostly still foreign? Do we have domestic?
Unfortunately, most of the funding coming into the country is still foreign.
Wow.
We're at the point where we're trying to encourage more local investments, because these investments are not just coming with capital alone. They're coming with experience. They're coming with understanding of the unique landscape that is Nigeria. We've seen that we cannot replicate Western ideas here and expect success. We have a lot of astute businessmen and women that if they were to invest in startups, it will make a huge difference with the mentorship, the access that they're able to provide to those startups.
So let me get back to the hobby part. Because you're told, do what you love. That would be the best thing to do.
I wish it were that simple. I think that I would prefer people to love what they do.
Wow. Not do what you love.
Not do what you love. Do
Please
what you love.
Help us to understand the difference.
It's really different. I could love something that I would see that it's not bringing revenue.
I love cooking, for instance.
Would you do it for money?
I believe so.
Would you be successful at it for money?
What do I need to make it successful?
So that's very different. We see that sometimes our strengths are not in the things that we like. Now you're an excellent comparer, you're an excellent media person, and I believe that you'll be paid more top dollar than if you were to cook, for instance. And that might be things that you might not love, but it's what brings the money. So beginning to love this would open other channels where you can make revenue, rather than just based on an interest or a passion.
So what do we teach the young ones? Because it used to be you find out the child is good with computer, for instance, then you encourage and nudge the child towards that because you believe that's the area of interest, that could also bring money in the future.
That's still very valid, I think what we should be teaching the younger ones is to explore the expanse of their potential. So it's not just one thing. For instance, a lot of people use computer science, which it's rare, but let me use a more common love that a lot of African young people, football, for instance. A child comes and says they love football, and you encourage and you nurture them, and you find that they might not be up to par to play at world-class standards, and that happens a lot. But is this child developing other traits, other vocational skills that can enable them to survive in today's world? I would say yes. Explore all your passions. Look for things that you can always do that will contribute value to your community. And you'd find that, yes, you'd enjoy playing football, but maybe that thing that you can do with your hands is what sustains your community.
So let's go back to what is the useful things now. What are those areas that, you say people are being more intentional now? If you really want to get the investment, what are the selling areas?
Oh, there are a lot. I would start from maybe a focus that we have at Cascada. Our ethos is impact through entrepreneurship. So we're looking for areas of value creation, industries that can create jobs. Agriculture, people run away from that, the younger ones. Agriculture, manufacturing, how many people can be employed in gainful, quality employment from these industries. There's tech as well, there's financial services.
I actually thought you would say tech first. That's what everybody says now.
Yes, but I think that for us, the focus is not just tech. Tech is an enabler. First of all, there has to be a solution. A problem that is being solved, and sometimes it's not through technology. Sometimes it could be through manufacturing. We have an unemployment crisis here. Sometimes it could be through even our hospitality businesses. It could be through business process outsourcing. There's so many things. Tech alone is not the solution. It's more an enabler to emphasize or to amplify a solution that's already been created.
And are we getting a lot of brains and interests? I mean, the skills, apart from the funding, coming into these areas. I love agriculture. I think it's at the foundation of everything, because from agriculture you get raw materials for even the technology and all that you're talking about.
There's interest now, but to be very honest, a lot of the interest is fixed on one aspect.
Which aspect is that?
The technology, the coding.
Okay. Yeah, because everybody I bring on the show, they say, oh, it's AI now, it's technology.
It's AI, for a lot of parts of the world, but we've kind of skipped the industrialization phase here. And it's something that we still need to look into. There's AI, but when we're talking about farming, how do we industrialize that? How do we use technology to improve the yield, for example? A farmer in the north is not looking to log into an AI to track his KPIs. He doesn't want to do that. He wants to make more money. How are we expanding distribution channels for that startup, for that farmer? How are we making them make more money without necessarily saying, join my app? So that's the way that I want more entrepreneurs to think about the solution. Yes, technology is great, but where are we now as a country? What is the thing that I or anyone would easily pay for? How do we really help? How do we create impact? Again, impact is really important to us.
And the picture or the video of the ICT minister using a drone on his farm, that's one thing that people will say, or even when you talk about agriculture, it collides with technology. But as you've said, where are we? Have we skipped the foundation and the basics to try to get, how many farmers can do that?
How many farmers? So that's a very interesting question. But even then, with aerial technology, it's being able to explain to the farmer what the benefit is. People see the cool drones and just see the drones, but more like, what are you checking for when you use those drones? The education aspect of it is missing, really, from the people that are the lower level. So there are a lot of things that we need to do, even with technology, to get to where we need to be as a country.
I think when it comes to agriculture and technology, we start from having mechanized farming first.
Exactly.
Increase our production, and then we can start talking about all of that. But anyways, thank you so much, Amanda, for coming to help us understand where the money is going to, and whoever wants to join, what you should be looking out for.
Yes, I'm happy to be here.
All right, Amanda Ituke is Program Director at Cascada. Thank you for your time.
Thank you so much.
Let's take a break. When we come back, Will Ibong will be here with global news. What's Trump doing again? We'll find out. welcome back. It's still Business Morning. Let's find out what President Trump is doing, and Will has the details.
Anthony, good morning. I am laughing because, you know, what we saw over the weekend, like Musk started his own political party.
Yeah.
You know, we thought it was only in Nigeria that we see this creation of political parties and everything, but we see a Musk now, you know, leaving Trump's, you know, the
group to form a party.
Republican now forming his American party.
Yeah.
You know, he has been tagged now the founder of companies and the founder of parties.
Well, that's what is called expanding your territory.
Oh, Musk is really expanding his territory.
Yeah, but let's see what President Trump will do about it.
Well, we'll see.
Because we know reaction is already trailing in, I guess.
Of course, we see the reaction, but let's just jump right in. We see, you know, starting off with U.S. President Donald Trump saying that any country backing anti-American policies from the BRICS alliance will face an extra 10% tariff. He made the declaration via Truth Social, warning there would be no exceptions. Now, his post follows strong criticisms from BRICS nations over U.S. tariffs and IMF policies. The group, now expanded to include Egypt, Iran, and others, is pushing for reforms to global financial systems and currency valuation. Now, as BRICS leaders met in Rio, they condemned recent U.S. and Israeli strikes on Iran and called for diplomacy amid growing global tensions. Now, meanwhile, China says it firmly opposes the use of tariffs as a tool of coercion, responding to U.S. President Donald Trump's threat of an extra 10% tariff on BRICS-aligned nations. Now, Foreign Ministry spokesperson Mao Ning said at a briefing today, Monday, that such actions serve no one and warned against using trade as a pressure tactic. Still staying with President Donald Trump, saying tariff letters will go out this week, but new rates now take effect. August the 1st, Commerce Secretary Howard Lutnick clarified the delays, saying countries now have until then to strike trade deals. Trump confirmed a 10% tariff on BRICS-aligned nations, calling it non-negotiable. Over 100 countries could face hikes if talks stall. The mixed messages rattled markets, with Asian stocks dipping slightly amid the uncertainty. Indonesia, now let's see how that is panning out for that country. The world's second largest wheat buyer plans to boost wheat imports from the U.S. as part of efforts to secure a trade deal before new tariffs take effect. The country will sign a wheat supply agreement covering 2025 to 2030 in Jakarta today on Monday. Now, according to Franciscus Welirang, that's the head of Indonesia's Flour Mills Association. Now, President Trump has slammed Elon Musk for launching a third party, calling it ridiculous and saying the billionaire has gone off the rails. Musk has announced the creation of the American Party to challenge Republicans and Democrats. The fallout follows Trump's new tax law, which ends EV tax credits, a move Musk opposes. Trump insists Musk knew about the plan during his endorsement. Meanwhile, Tesla shares have fallen 3% in early trading following the news. Now, Israel's central bank is expected to hold interest rates steady for the 12th time as it monitors whether the shekel's recent rally will cool inflation. The local currency hit a 3-year high after President Donald Trump brokered a ceasefire with Iran, ending Israeli and U.S. strikes. The rebound reversed losses linked to judicial unrest and the Hamas conflict. Let's check in on Germany. Industrial production jumped 1.2% in May, defying forecasts of a decline as firms ramped up output ahead of expected higher U.S. tariffs. Key sectors like cars, pharmaceuticals, and energy drove the surprise rebound, with analysts linking the surge to export fears amid global trade tensions. Now, from Germany, let's head to the UK, where we see UK annual house price growth slowing slightly to 2.5% in June, down from 2.6% the month before. Our London correspondent, Juliana Olayinka, joins us to discuss this and more. Good morning, Juliana.
Good morning, Will.
Juliana, we see UK house prices were flat in June at about over £296,000, and annual growth increased to 2.5%. Is this a sign that the market has stabilized after the stamp duty shocks, or is demand starting to soften here?
Well, it's a good question, and I think we're kind of in a wait-and-see phase. Clearly, prices have plateaued, and the momentum that we saw earlier in this year is beginning to fade, I think. Possibly the biggest reason is affordability. That remains a major pressure point, £280,000 is a lot of money. And of course, if you want to live in the capital city, you're going to have to double that. So we're talking about £500,000 at a time where the macroeconomic environment is not that great in the UK. Also, of a particular phase for some homeowners who were used to having ultra low fixed rate mortgages, which they secured in about 2021, 2022. Now a lot of them have an option to remortgage, but they're not in a position where they can afford a bigger property, upsizing. So I think that's reflecting on the markets too.
Okay, but we've seen from that report from Halifax, we've seen the Northern Ireland posted nearly 10% growth, while we see London as the hub of England or the UK, and the Southwest barely had recording any growth at all. What's behind this glaring regional gap, and what does it tell us about affordability, housing affordability across the UK?
Yeah, I think affordability is the main point there, Will. And of course, we can see that the UK housing market is very fragmented depending on where you want to stay, right? So if we're talking about Northern Ireland, which is the case study, average property prices there sit at just over £183,000. Now, that's according to Halifax. If you look at that figure, that's more than £110,000 below the UK average, which is about £290,000. And that's £350,000 below the average price in London, which is above £500,000. So, of course, it depends on the region. Also, as well, affordability. And I think, of course, you get more for your money, don't you? So if you're somebody who's lucky enough to be able to live in Northern Ireland, you have a really nice property, good garden, nice drive, and you pay much less than you would live in a contrasting area like London or the Southwest.
Especially in London, where you get those small rooms, single rooms. And I'll talk about this move away. We see nationwide, like about mid-June, there was a news in the news that we saw nationwide announcing new pay rules, which customers, definitely did slam. But we seen the members recently, that was yesterday, saying they won't get a binding vote on Debbie Crosby's, that's the CEO, that 43% pay rise that she is requesting for, which could take a compensation to about £7 million. How serious is this governance loophole here around the building society rules?
Yeah, it's an interesting talking point, quite technical and very niche, but this is about Debbie Crosby, as you quite rightly said. She became CEO of the Nationwide a couple of years ago, and at the time it was a big story because she was the first woman to lead the UK's largest building society, and she has made a success of herself. There was a £2.9 billion takeover of Virgin Money earlier in the year, but this was the first time that sort of the way Nationwide is being governed underneath her has raised some eyebrows, because even with the Virgin Money deal, I don't think she consulted the members as much as they would have preferred. Now, a big talking point is this eye-watering pay rise. So yes, the suggestion, or should we say the proposal, is that she would be receiving a 43% pay rise, which will, as you said, will bring her salary package to about £7 million. Now, as you can imagine, there are lots of critics wading into this debate, including the High Pay Centre and the campaign group Positive Money, and they say that, it's totally ridiculous. And also, going back to the governance, Nationwide members are arguing that pushing through this multi-million-pound pay deal without giving them a say sends the wrong message.
Speaking of critics, you mentioned, you're seeing them saying that Nationwide should protect their members' rights and not imitate the big banks, in terms of the executive pay. Does this move by Nationwide threaten its reputation, which is already built over time, as the ethical alternative to mainstream lenders?
Perhaps, yes. I don't think it's a major talking point amongst the public, but I think, the fact that Nationwide is a mutual means that the bank is owned by its members, not the shareholders. And as you said, well, that model is built on trust, it's built on fairness, and keeping profits focused on customers, not big executive pay. So it's quite difficult for them to adhere to that ethos and then offer your CEO £7 million annually. It's a lot of money, which is why campaigners are up in arms.
And definitely, in these times where we got bigger bills to pay, inflation rising, executive wants, also bigger pay, especially if they're making the money. Hopefully, they're making the money. Thank you so much, Juliana. Thank you for your perspective on Business Morning, as always.
Thank you, Will.
Lainey, I'm asking for a pay rise right now. A pay rise. Executive are asking for pay rise.
I didn't know you're one of the executives.
Oh, of course.
I wish you the very best in your bid
for a pay rise. Well, if executives in the UK can ask for a pay rise, I'm looking at the inflation and the economy. I'm thinking that is the reason that's driving this, because they've got bigger, the more you earn in the UK, the more you pay in taxes. So I think that is, one of the reasons they're looking to, ramp up that payment.
Okay, but maybe not in Nigeria, yeah? After all, we have tax reform. And,
well, the tax reform...
Yeah, the low-income earners are going to be exempt at least to a certain level. So perhaps we have a more friendly tax environment, but that starts from January.
That starts from January, so we still have the rest of the year to battle out. Thank you.
Will, you won't put me in trouble. All right, just before we go, let's tell you how the market fared last week here in Nigeria. We saw the NGX, Nigeria stock market, back to the 120,000 level. We saw that it lost that for most of the week, but by the end of the week, it was back to the 120,000 level. So it went up 0.83%. That was an impressive one. Not as impressive as other weeks, but I mean, we're still in the positive trend, so we should celebrate that. And we saw the market cap close at about 76.339 trillion naira. It was up 0.5%. Activity charts mostly in the green. Volume at about 5.4, value 108 billion naira, and then deals up 118,570. And of course, the usual suspects, we would say, drove all of that. Banking, top on the list. We saw banking there up 0.12%. The big guys did that. Consumer goods also did so well. We've seen consumer goods really trend. A lot of confidence building up around some of those companies. PZ. I think a lot of investors made some money from consumer goods last week, or like the upper week was MTN and all MTN Nigeria. Industrial goods was, however, down more than 2%, down 2.11%. Insurance, the penny stocks got attention. Congratulations. Been a while since they got this much attention. 5.86% for insurance. Oil and gas, it's trending slowly but surely. The Aradels and O&Os, making a lot of moves, right? Especially O&O. They've been making some acquisition and getting a lot of positive attention. Of course, investor sentiment will follow the news. So we saw last week oil and gas was up 0.77%. Top gainers, Mayor PLC, RT Briscoe, FTN Cocoa Processor. Those were the top gainers. And FTN Processor gained as much as 40% on its share price. So that's some money in some investors' pocket. Top losers, PZ lost. Julius Berger, oh, I don't know, let me not say much about that. Score Nigeria, PLC also was part of the losers. Top trades for last week. Royal Exchange, remember the insurance? Those are the people who drove the insurance, the Royal Exchange. And then Access Coal, Japan Gold, I'm glad, also recovered last week. Moving to the unlisted market, the NESD, we saw it was also positive, 1.42% up, closed at 3,398.64. The market cap also went up to 1.99 trillion naira. That's what it closed at. Activity was mostly red. Volume 2.8 million, value 87.1 million, and deals 131 in the red. Stocks traded were 16, and top gainers from the unlisted market, the NESD, was Food Concepts PLC, Air Liquid PLC, and 11 PLC. They were the top gainers. The flip side had, well, the body itself, NESD PLC on the top loser. Industrial and General Insurance there, and Firstland and Capina also lost last week. So we're starting on a fresh note, but at least starting with some positives in the market, hopefully to be sustained. Investors will continue, sending their money to the market here in Nigeria. And we do want domestic investors, because we know what happens when we have FPIs, or foreign portfolio investors. Once there's any news or they have a lot of gains, they're out. And then that's when we see the market numbers looking terrible. So let's Nigerians invest in Nigeria. Well, that's it for Business Morning today. Thank you so much for being a part of it. I'll be back in a couple of hours for Business Incorporated. I'll be here with Will Ibong, and we'll take you around the world of business in another 55 minutes, giving you updates and all the news that you need to know in your money making and money spending. I'm John Mekwa. I'll talk to you later.